The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 3rd fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary weekend. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I just past 1 o'clock in the afternoon on this fabulous Friday. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I am here to serve you. So feel free to call in. Now it's not too early, 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show started on fantastic and fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading down 69 points at 17,768. S&P is off 11, trading at 2094. NASDAQ Composite down 40 points. She's trading at 49.31. Russell off about 11 points, trading at 11.60. Gold's up $29, $12.42. I had given you a target in the $12.30-ish range out there, so I'm off just by a few shekels as we speak right now. And the bounce, right? We talked about this for days and days and days. Well, that certainly has come to fruition. Silver up 33 cents, trading at $16.35. Light sweet crude back 80 cents. She's trading at $48.37. Leading the charge here, individual stock-wise, to the upside, you've got Broadcom, AVGO, you've got Randgold Resources, China Biologic, Franco-Nevada, Agnico Eagle. So all of the gold miners leading the charge to the upside. To the downside, Google's off $8. That's a little over 1%. Regeneron Pharmaceuticals down 1 3/4%. That's off $7. Chipotle down $6, about 1 3/4% to the downside. So lots to talk about, lots to try to figure out. So let's do that together, right? And let's just go through this. It's always good to do it step by step. Now, today's close is going to be very important. And, you know, can I tell you how the day's going to close out here? Well, we're going to go try to figure it out. That's what we're going to do. We're going to go see what the market is communicating to you and I. It's really about being able to read the message of the markets. And the only thing that we can do is use the information that's available to us right here, right now. And then that means when that information changes, should it change, be willing to change our opinion. So let's start off. Let's go take a look at the advanced decline oscillator lines and see where they're at about 1:10 in the afternoon. And we'll do this by taking a look at the New York Stock Exchange. So we've got three that are easy to read because they're the three that I've got the ability to give you up to the second data on. So you've got the New York Stock Exchange, left-hand side of the chart. That's the first panel. Panel number 2 is NASDAQ Composite. Panel number 3, the Dow, which has been a weak link out here. Of all the indices, that has been the weakest. Got the S&P 500 to the very right. And there we don't need to use the advanced decline oscillator. Not that I wouldn't want to use it, but I don't have the access to it at this stage of the game. But we don't really need to use that. Instead, what you and I like to do with regard to the S&P 500 is what? We like to pay attention to the VIX index. We like to pay attention to where it is in relationship to its 50-day exponential moving average. All of these have meaning. In the case of the advanced decline oscillator, in its simplest form, and there are times where it gets a little bit complex, but right now we'll look at it in its simplest form, because in simple or complex right now, it's all got the same message. And that is, when that line is above zero, it is the buyers that are in control. And as we can see, New York Stock Exchange reading, it is above zero. The reading is 62.40. In the case of NASDAQ Composite, positive reading, 71.4. In the case of the Dow, also another positive reading out here. So who is in charge of the market? We don't really care what sent things moving south. And even as things were moving south this morning, guess what? These lines were still all above their zero line. That was telling us that it is buyers that are in control of the game. Now, I don't know about you, but when you're watching a game of sports or you're playing a game, you're maybe playing golf or tennis, whatever it might be, don't you want to know who is in control? Who's in control of the game out here? Well, when you're playing the stock market game or the commodity or whatever it is, you want to know who is in control of the game. In fact, I'm going to be doing a workshop on Tuesday, June 14th out there. It's going to be for subscribers. It'll teach you to easily identify who is in control of the game. You know what? I love all the contributors here at TFNN. So much to offer, and Basil put on a great workshop last night. One of the things that I like, stealing a phrase from John Logan out here, in taking a look at those market profiles, it helps you to eliminate one side of the trade. And I'm going to show you another tool that's not profile driven that will help you to eliminate one side of the trade. It is what gave me the conviction to have my subscribers and I exit our short position in gold. Yes, we exited. I told you we'd exit it because we were anticipating that gold was going to go ahead and bounce. I even gave you the levels that we anticipated. I anticipated that gold was going to go ahead and bounce to. Now, it's up above those levels, and that has a connotation all to itself, which says that if we close above those levels, that we'll see a price move even higher. But it's all about the end of the day. And just as these charts are, quite frankly. But right now at 1:12 in the afternoon, we know clearly that it is buyers that are in control. We also know, taking a look at the VIX index, and that is also giving us that exact same signal. You got the VIX trading out right now at 1388. The 50-period exponential moving average is 1510. The high of the day, 1466 out here. There's only two outcomes when the unless you're seeing a significant turn in the marketplace, and we don't have that. We don't have any signals that that is what is going on in the marketplace. And so when the VIX is below the 50-day exponential moving average, the market's going to do one thing: move sideways to higher. And what's it doing as we speak right now? It's moving sideways. It's pulled back a bit. That qualifies for me as sideways. So as we take a look at the signals coming from here, and this is an important set of signals. There's nothing out here that says that we need to be worried at this moment. If we go take a look at an intraday chart, and it just so happened I got back from an appointment and quickly looked at the charts to see what was going on. I posted something in the Tiger's Den, and I didn't go back to try to read all the other comments because I wasn't sure if somebody else had perhaps posted the same thing. But let's go to the 2-hour chart out here. I actually first noticed it on the 10-minute chart, went to the 30, went to the 120 just to see if I could see the same thing. And that same thing, by the way, that I was looking at, this is the 120-minute chart here for the NQ, was what Larry Pesavento had created, the 3-drive. Actually, he didn't create it, but he certainly popularized it. The 3-drive to a top, or in this case here, a 3-drive to a bottom pattern. Now, the beauty about that pattern is it can't be forced. If you force it, you're really not trading the pattern out here. What do I mean by forcing it? I mean, time needs to be, at least within a bar, it needs to be symmetrical. And if we take a look at that, I'll go ahead and put our bar spacing tool out here. In the first drive, okay, that we're taking a look at, began at 10 o'clock in the morning on June the 1st. And that's what's referred to as Drive 1. Drive 2 ended up taking place at 8 in the morning on June 2nd. You see, if I move this over just by one bar, that happens to catch our bar right here that took place this morning. This morning at 10 o'clock, began at 10 o'clock. That was our third drive. And we also have Fibonacci expansions, either 1.272 or 1.618. And voila, that, my friends, is a hammer candle. This is a very powerful pattern. It says you go all the way back to where the first drive began. That says we're going back to the highs on the 10-minute, the 30-minute, and the 120-minute charts for the NQ. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 64, S&P is down 10. So here's what we know thus far. We're walking through the charts. We're using just our normal patterns, our normal piece of information that give us clues and signals about the market, who's in control. That's the first most important thing out there. And that way we can anticipate what the market's next move is going to be. So what we know is that all the advanced decline oscillators are above zero. Bulls, buyers, in essence, are in control. VIX index below the 50-day exponential moving average. S&P 500, therefore, in the hands of the bulls out there. We also know that the NQ, which has been relatively strong out here, formed a nice bottoming pattern. It formed a nice little three drive to a bottom pattern, did it with a great reversal candle, did it with a nice hammer out there. That says that the low of today is also very important, because if there's nothing more bearish than a failed bullish pattern, and that, in essence, is what we have in place today. So that's very useful and very helpful information. What else was the market doing out here? Well, if we take a look at the S&P 500, right, let's go take a look at it. You're going to see, if you're watching us on TigerTV, you're going to see my chart for the daily S&P 500 with a little red line on it. Now, that's the red line that every trader absolutely must know. Trader or investor, you want to understand where you're at, which side of the market, which side to eliminate, what's the right side of the market when the market is has issues out here. This is the red line, which is what I'm going to be teaching. It's called the oscillator on change line, by the way. We're not going to go into the mathematics and all the nuances with regard to it, because that's why I'm doing a workshop, which is easy and free to attend. Just go over to the homepage of TFNN.com. You can sign up. Get the routine. You get the free newsletter for 30-day, the whole deal. But in any event, as we take a look, this is the S&P 500. Now, it is a really important line of support or resistance. Once you get above it, you basically should be, well, it's very clear. You eliminate the short side of the trade. You should then be long out here. And if we take a look at let me get my cursor out here. If we take a look, just simply going back into the October 1st, 2015 timeframe, the market had bottomed out the day before, September 29th. You closed right above it that very next day. If you were wondering at that stage if you were short, should you be exiting out of your short position, tightening up your stop? This little tool here, gave you that message, just as it did back here when the market had made the top back on November the 10th. Now, the actual top, the high came in on November 4th, 2015. And so, just follow the red line. Well, where are we at today? Well, what the market did thus far is it came back and it tested. All it did was it tested a level of support, right? Once you get above a level of resistance, which in essence is what the S&P 500 did right here on May 25th, once you get above that level of resistance, it ought to act as support. And it is really simple. It's really clear. Take a look at what transpired on June 1st. Came back, tested that level as support. Did it again on June 3rd. Did it again today. Now, that price point, this is going to change from day to day as it's being calculated. It's actually changing on the fly. But right now, 2091.39 is a level to be watching for. If the S&P 500 closes below that level, that could spell trouble in the days ahead out here. But as long as this area holds, so it's another valuable, and I do mean valuable, piece of information for us to utilize. And we got to take a look at all the indices, right? And we can go ahead and we can put up the let's put up the Russell 2000 right now. The Russell 2000, which has been so very strong, it has taken out swing points. It has done it with volume. It says that it's going back to the top and more. The level to be watching inside the Russell 2000, 1148. You're at 1161 right now. I seriously doubt that we're going to see a close below the strength inside the market as we speak right now, below its oscillator unchanged line. So what is its message? Its message is very clear. Its message is to be long and strong. If we take a look at the NDX 100, the number out here hasn't even been tested. 44.6696 is the number out here. So what is its message? Its message is to be long and strong. Now, there's other elements that I'm going to be teaching at that workshop. Here, I'll put up the cues. In this case here, what I'm going to do is I'm going to put up the cues, but you're going to see a convergence of three different lines out there. I'm not going to go into the full explanation right now, but I will absolutely cover it in detail so you can use this in your trading and your investing decisions out here. But there's areas where we have the market is telling us to be either long or short, and then there are confirmations that follow. You got to have confirmations with everything inside the marketplace out here. And what is the current confirmation that we've got? To be long and strong. This is just taking a look at the QQQ series ETFs. And I'm telling you, in a market in a summertime where you're taking a look at markets with light volume, you want to make sure that you have got this tool, this indicator that you are paying attention to. So how was it that subscribers of mine and I knew to get short gold, knew to get long gold, knew to exit and what to anticipate that the gold was going to go ahead and bounce? Well, look, folks, we ended up going long into the gold marketplace back in December in 2015 when we started to see the failures out here in March. Let's come back and take a look at it. We started seeing these failures at the end of February and March. That was a signal to start getting short. Why did I have all this conviction? Because I know the price pattern behaviors involved with this, plus additional indicators that we're using. We use those seventh wave counts. We use those price relative strength divergent patterns. You put all these together, and the signal is very clear out here. And now what we're seeing today, why was I giving you the figure of 1230-ish? And why was I so convinced? I don't know that there were people, other hosts on financial shows around the globe out here getting on and saying gold is going to bounce to 1230-ish. I just don't know that I heard that too often. Well, why did you have that conviction? You had that conviction because you were using Stevie's oscillator unchanged line. Now, the close today inside of Goldilocks is going to be very important because if you close above 1236, its meaning is that we're going to see a further bounce in gold. But if it closes below 1236 today, all that gold has done is come up to a level of resistance. In fact, the signal would be very clear. It would be sell the bees out of gold. But if it closes above that line, you've got to, what am I going to say? You've got to wait. You've got to wait. Why do you got to wait? Because it says now that you are in an area where gold can be turning around and moving to the upside. But that turning around and moving to the upside, I do not believe that large commercial traders, and we've paid attention to that data as well, that they're now convinced that gold's going to make its next move to the upside. So this is just a market here. This is a trading market. But if gold closes below 1236, if it closes below 1234, that's just testing the top of its brand new daily market profile, which, by the way, and you know we do this from time to time. Let's go ahead and put this chart out here. And as we take a look at the TAS market profiles, let's turn off the weekly right now. You're going to see that a brand new daily box formed today. And where did it form? It formed below the prior box. Is that bullish or is that bearish? You know the answer to that. It's bearish. Now, but here's the deal. If you can see where that point of control is here, 1223, much closer to the 1234, the top of the box, than it is to, I won't say much closer, but it's certainly closer than it is to the bottom of the box. So that's a significant resistance. Watch 1234.20 today. A close back below that, you're going to have two indicators that say all this was just a little bit of a relief rally in a downtrend inside of Goldilocks. Likewise, if in fact it closes above those levels of resistance that it shouldn't take out, that says that gold is likely going to head up to 1286. What's at 1286? That happens to be the top of the weekly box for Goldilocks. So that's using this indicator. If you don't always need price on there to help us. In fact, sometimes it's better just to take price off, see what the meaning, what the message of the markets is, have that written down in your head or in a piece of paper, and then know what to go look for. So come on over to the homepage of TFNN.com. You want to learn about this red line. This is the type of red line that you will pay attention to and you will take action. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 70, S&P is down 10. Let's go out to California and speak with Brent. Brent, thanks for calling. Thanks for holding. How are you doing this morning?
I'm doing very good, Steve. Thanks for taking the call. It's always a pleasure talking with you.
Well, thank you. Same here. And this morning, of course, this afternoon our time, you want to take a look at ticker symbol CLF, which is Cliffs Natural Resources. Tell us what you're doing and how we can help you.
I'd like to make one quick comment before we get to the stock, if I could, Steve.
You can make 3 comments.
All right. I just was going to compliment you on your newsletter.
Thank you.
Originally I tried it, I guess I should say. It's been, time flies so quickly. I want to say probably 3 years ago.
Yes.
And I didn't continue with it. There wasn't anything bad about it. It just was a little different from my trading style.
Yes.
Didn't seem to match that well. And then I restarted being a subscriber here, I'd say within the last 3 months or so.
Yes.
And you've just done a great job. I mean, a huge improvement, and just you've obviously matured in just your style and the way that you go about, doing your analysis. So I wanted to just extend a compliment that it's definitely much more in line with my trading and just a lot more complete, I would say, as a whole package, just laying out specifically what to look for, or just everything all across the board is much more defined than it used to be. So just wanted to give you a compliment about that.
I appreciate the comments very much. It means a lot to me. There's no question that my skill set has evolved and will continue to evolve. For individuals like yourself and myself, where growth is so important and that our minds are so open to learn and try to really master this game. It's nice to just have. That's the beautiful thing about TFNN, and that what it has here, the folks in the den and so forth. It's just great commonality there. So I really do appreciate those comments very, very much.
Yeah, I mean them wholeheartedly, Steve. You've been a big help to me as well as so many people on TFNN. And but I just noticed the difference, and I wanted to make a comment about it. So.
Well, that's great. Well, that's wonderful. Now let's try to get this trade right for you on CLF. Let's not blow it.
Okay. I'm in this stock. I have been since 310. I have 1,000 shares of the stock itself, and then I have August $2.50 calls on the stock as well. And I'm looking at kind of it's something I want to hang on to. I talked to Basil the other day, and it had made that big gap up, and he thought I should probably skim some off, and I decided just to hang with it. And I knew I was taking a chance doing that. But there's things about it that it seems to be holding this price. And if I look at I could argue that it could potentially make a very large AB equals CD if it were to get above that. I think it's 583 high that it made back there in March. I'm looking at I guess in May. I'm looking at your chart on the computer right now, but.
Yeah, no, you're right. You're right. Yeah, you're right. It made that nice high on April 28th with big volume, So you have an untested high, 47 million shares out there. So no question that it's gunning for that.
And so, I just wanted to get your thoughts on what you think, shorter term, longer term, what the potential is with it.
Well, if we just take a look, folks, if you're watching us on Tiger TV and we take a look at Cliffs Natural Resources and we just eliminate a couple of tools. In fact, if we just look at it from the standpoint of the volume that has come in or out of ticker symbol CLF since it made a low back on January 12th, and that low out there was about $1.20. And when things come off of the bottom, what Brent knows, what you know, what we all know is you like to see some type of sign of strength. Well, in the case of Cliff Natural Resources, it had a huge sign of strength on March the 7th. And at that stage, that was 25 million shares. It goes ahead and it pulls back, in essence, into an area where it had broken out of. Knowing that you had that high volume bar back then on March 7th, we would have said that that's going to get tested. It was a high volume high and it was coming off the bottom. Says that it was going to get tested. And in fact, it did get tested. It finally got tested on the trading day of April 12th. Now, on that trading day, 15 million shares was taking out a high that had 25 million shares. So technically speaking, you wouldn't call that an A to B equals CD to the upside or a confirmed pattern. But in fact, that's really what it did. It made a 1 to greater than a 1 to 1.272 A to B equals CD. So volume isn't always the final arbiter of where price is going to go. So we know we had that nice sign of strength. And on the trading day of March 18th, folks, there was another sign of strength as it was testing that same swing point, 19 million shares. And then, so if we take a look at that pattern and then we apply it to where we're at today, April 28th, as Brent points out, at a price point high of 583, another huge sign of strength. So previously, we know we had an untested high volume high. Says it was going to, you know, the technical analysis is that it's going to get tested. There's no difference this time around. And guess what? As price is moving up towards that swing point, Brent gets another sign of strength in this equity, 46 million shares to the upside on May 31st. So it's not in there. It says that the swing point itself gets tested. Whether that's low or the high, we don't really know. 472 is the low. The high is 583. But Brent's taking a look at this really more from a longer-term trading standpoint. So, you know, I don't see any logic or reason. You know, the reason why. So the question might be, well, why did price pull back? You know, that would be a normal question. And the reason that price pulled back is if I pull over this chart on a daily basis, what each of us know, folks, is that the patterns inside the markets, doesn't matter what it is that's being traded, doesn't matter what time frame that's being traded, that when the rubber band gets stretched and it makes a higher high and does with less relative strength out there, you have to be careful. And in this case here, that's exactly what Cliff's Natural Resource was doing as it made that high volume high on April 28th. Well, its work to the downside is done. Now it's going to go back and it's going to go ahead and test that area. And even if it takes it out, Brent, with light volume as it did in the past, that could be the large A to B equals CD to the upside. So I don't see anything here that you know, it's broken a trend line to the downside. It also has resistance that at 509. So at 509, you can expect this to have a little bit of a bumpy ride out there. But otherwise, I see the logic in it. It sure looks like, and the reason I would think that Brent's taking a look, I don't know anything about the company. Maybe you can share something with us about the company. But this thing, folks, has come all the way back, you know, in essence, to an area that was in place in the 2000s time frame. And so, you know, it's all the way back down at the bottom. We've seen a couple signs of strength off of the bottom. What does Cliff Natural Resources do?
It's in iron ores, iron pellets, I believe.
Okay.
Their main business. And it got beat up, obviously, big time from where its highs were. And I think it's back to being profitable again. And I think they've worked through some of their, you know, problems that they had. And we'll just see going forward if it I don't do a lot of the fundamental part of it, but they actually do make money again, and technically it looks good to me. So the two together, you know, it's something I think I want to try to stick with as long as I can.
Absolutely. Well, I concur, and thanks so much for sharing this one with us, and especially thanks for sharing the comments about the newsletter. Much appreciated.
You're very welcome, Steve. Have a wonderful weekend, and I'll talk to you soon. You take care.
All righty. You too. That was Brent in Martinez, California. This is Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now, we've got the Dow is off 59 points, and I've got some weird thing going on with my computer system. Okay, what I wanted to do, what I was trying to do is I want to take us on a spin over and take a look at the healthcare sector of the S&P 500. And we're gonna try to do that. The XLV is what I'm referring to, and the reason that we want to take a look at that is here's a blank chart in this. It's got the volume behind it, so we just want to focus on the volume, and because yesterday was quite impressive when we take a look at the healthcare sector, which I believe is the second weighting inside of the S&P 500. Now, the reason why it was impressive is because we were, in essence, as you know, we're in the seasonal cycle where there's going to be light volume, and when you can take out swing points here in this case, we're talking April 22nd. When you can take that out during a soft type market and you can take it out with volume, it's pretty big information. Now, that's the trading session of April 22nd. That's 12 million shares. And yesterday's move to the upside was 12.5 million shares. So it was 12.0 versus 12.47. Swing point taken out with volume. Now, it also went ahead and it closed this window. It repaired this little gap down, this little window that also should have held as resistance. So we have two resistance points inside of the XLV. That gap down was at 72.03. The gap down, by the way, was with 19 million shares. The move up 12 million shares. But once you repair a window, then in essence, old resistance should become new support. Now, today was a test of that support level. 72.03. So, in fact, it's really done its work. Now, there are multiple A to B equals CD patterns that one could go ahead and put on the chart here. The conservative one would start with the swing point from March 7th, use the swing point from April 22nd as your B point, and then the retracement down into, it looks like it's probably May 6th. It's either May 6th or it's the May 19th level. That 1-to-1 A to B equals CD says you get 75.06, maybe 76.82, more likely 76.82 out of this. That's the conservative one. The non-conservative one, the aggressive A to B equals CD pattern, comes all the way back to the lows on February 9th and then uses the same B and C swing point out here. And that gives you a move to 78.04 to maybe even 80.61. So that's the second weighting inside of the S&P 500. Now, if we put this on a weekly basis out here, you're going to see that it's light volume. The gap down, and again, that gap is being filled as we speak. It's still at a price point of, the gap is 71.91. So that's the price point that you would be watching today, 71.91. That's on the weekly basis, but you're above that. And as long as price closes above it, it's going to do it with lighter volume than the gap down. The gap down had volume of 83 million. We've got a shortened holiday week out here, but let's face it. I don't care if you divide by 4, multiply times 5, you're not going to get anywhere close to the 80 million shares to the downside. But that says 71.91 really should be a level of support out here. It says that the XLV, the number 2 weighting structure, wants to go back to its highs out there. If we take a look at the XLF, go see how the financials did today. Now, what the financials are doing is, and what I have drawn in on this chart here, the green line really represents a channel line more than it does a trend line. They're so close, it doesn't really matter. Remember, we use these as guidelines, not necessarily as exactness out here. We can see that price ran right up into that level, and it has backed up. Let's look at the daily chart. But, of course, it is also a rising price channel longer term. So if we take a look on a daily basis, what is the XLF doing? So now you at least know what those green lines and the red lines are on my screen out here. It's backed off today with pretty decent volume, 30 million shares. But this thing had moved off of the lows out here with 81 million shares. So this looks like it's almost tested it. The high of the trading session from May 18th is 23.29, and the low today is 23.26. So you've gotten a test, in essence, of a swing point inside the XLF on light volume. It's not going to bust it down. It's rejected that swing point. That says that the XLF, which is the number 1, number 2, number 3. It's one of the top 3. I can't remember which one it is out there inside the S&P 500. That says that it wants to run higher, but it's got to clear that resistance line. We know that that green line, that diagonal green line, is a significant resistance line. But you can draw that on your chart too. If you draw that on your chart and you see price close above that area, you know the XLF is ready to run up to a higher price. If we take a look at the number 1 sector out here, that would be the technology sector. See what it is doing. Really just sideways action today. It is running into a gap to the downside. It, in essence, has repaired that window, but it failed to hold its support. So 44.10 is a level that the XLK needs to get above. And if it can do that, it ought to run up at least to the highs. It's not that much higher, 44.72. Let's put this on a weekly chart out here, see if there's anything that pops out at us. What pops out at us? What pops out at me is it's so close to the highs out here, right? Its all-time high must be the week or the November in 2015. Is that it? It's 44.65. Do we get above 44? Yeah, we did 44.72. 40. Okay, I take that back. The high out here inside XLK is 44.73, and that was the week just a couple months ago, April 4th. So 2 months, the week that began April 4th out there, and that price point is 44.73. 48 million shares up there. We're trading inside that swing point. Was that it? Yeah, that was it. As long as you close inside 43.72 and you're at 43.88 right now, that says you're going to get and last week you were moving into it with volume. In essence, 42 million shares was moving into 48. That's not too shabby. So that's your top 3 sectors inside the S&P 500. So you put that together. You put that together with the oscillator unchanged line. It's an invaluable tool. You want to understand how that's calculated, how you can apply that to the charts, how you can do your own calculations, even if for some of the equities that you're in. I'm going to teach you how to do all of that, so you know which side of the trade to be on. Because there's nothing better than sitting in front of a computer screen and then step by step putting it together. What is the message of the markets? And there are going to be some days where the message of the markets is neutral or it's just not clear. And let me tell you, not being clear is clarity. There's nothing better than that out here. So we know what it is that we're looking for into the end of today's trading session. If all these levels of support hold, what does it mean? It means that price continues to move higher. Gold's up $30 right now. It's trading above a level of resistance. That means that it too wants to go ahead and move higher because it will have broken above a level of resistance. That should in fact hold as resistance out there. So what else can we look at? How about the big moves inside the dollar, which was really a big move inside the two currencies that move were the yen and the euro. If we take a look at the U.S. dollar index right now, it has pulled back inside. This is a weekly chart. Let's put this on a daily chart. And what the U.S. dollar index in essence is doing, it's flirting with a descending price channel that it broke out of. It's really close call right here. You can see that the current price of 94.09, I believe there is a 10-minute delay on this. So at 94.09 is doing nothing more than testing the rising price channel that it broke out of. Now, of course, if that's what this is doing, we probably have something similar going on inside the euro. But remember, the U.S. dollar is a basket of currencies, right? So you've got 6 currencies out here. So you really have to take a look at what's going on with the pound, the yen, the Canadian dollar, the loonie, the Swiss franc, and the Swedish krona. But if we take a quick peek at the chart for the euro, what was the euro doing? A slightly different chart. The euro has a rising price channel, and price came back to test that low, and obviously a big move higher today. So this would say that the euro ought to run up to the top of its rising price channel, perhaps find resistance there. That says the U.S. dollar index ought to get weaker, and that would support gold getting up to that higher level that you and I talked about. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow's off 56. S&P is down 10. Composite down 35 points. I have a question that came in that asked if I would cover silver and where's silver in relationship to its oscillator unchanged line. That's referring to the workshop that I'm going to host on June Flag Day, Tuesday, June. I should probably know that date and have it memorized, right? But I don't. It is the 14th. So Flag Day. So we'll be flying a flag for sure. Now, with regard to silver, I'm going to put this chart up on my screen here. This is a continuous contract. And so the numbers here are going to be slightly different than the July contract that is being traded. I didn't have enough time between seeing that email and recognizing that I didn't actually have the current contract available on the system. I'll put it on there, but it just will take a few minutes. But nonetheless, we're going to get the same type of message. Now, silver, which is trading around the 1630 level, the chart does not look anywhere near as good as gold. In fact, it has performed, it has completed the work that it needed to do to the upside in order to start moving back to the downside. You see, I'm going to be teaching folks about these three lines that are on this chart. The first and most important one is the red line. That red line is referred to as the oscillator unchanged line. And when prices below that, just as it was out here, it tells you that you're either going to get a retracement or something deeper than a retracement, but it's helping you to identify and understand which side of the trade to be on or not. Just as John Logan says, eliminate at least one side of the trade. Well, when you get this little convergence here, this little crossover of these three lines, it's really important. And it's really important to understand how is price behaving as that convergence is coming together. It was the reason that we exited our short trade in gold. It was the reason why we were anticipating that gold would go ahead and bounce up, and it was one of them. There were several out there. And in the case of silver, the most bearish thing for it to do, I think I had mentioned this to you before, but the most bearish thing actually for the metals to do what they've done is to do just this, which is really to bounce up into a level of resistance and then to fail. Now, we have a diverging pattern here in that gold's giving us one message and silver is giving us another. But at this stage here, until silver is able to close above the 1650 level out here, it's done the most bearish thing possible. Move up into resistance. That doesn't mean that it starts right now, today, or at 1:56 p.m., but it could start anytime. It could be Sunday evening. Could be Monday. But at this stage of the game, the message here is very clear. It has done the most bearish thing that it could do. Moving lower, and moving below the low from just a few days ago out here will give you, well, quite frankly, a huge A to B equals CD to the downside. So let's take a look at silver on the daily basis. A little bit of a diverging message between it and gold out here. So nothing left for us to really cover that I can see out here. The message should be pretty clear to each of us. The markets are going to move to higher prices. The minimum expectation and time for how long this market is going to run is probably through the middle of June. And the longer expectation, folks, you probably, well, bears do not want to hear this, but the longer expectation, September 9th. You can go ahead and put that one in your calendar. And which one is the market going to follow? If the S&P takes out its highs, and it probably will do it within the next week or before the middle of June. If it takes out those highs, you can expect a market that trades both ways, but it'll move higher from a standpoint of not really wanting to sell this market until September the 9th. Well, give me a couple of days in there, something like that. But that's how the markets read as we speak right now. But folks, stay tuned, because my favorite polar bear, and I know he's your favorite polar bear too, David White, he's going to be up next. After that, we've got the Tom O'Brien Show from 3 to 5. Have a fantastic, fabulous, fun weekend. It is summertime. That means no drinking and driving. Got to use Uber or just walk. And have a great weekend. We'll see you on Monday. Take care, folks.
Larry Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.